Hey guys, what's up? Now, a lot of people asked me a question in my previous mutual fund videos that Shashank, what is the difference between flexicap and multicap? What is a multicap fund? And today, a lot of people have been actually talking about multicap funds. So today I thought let's quickly educate ourselves on multicap. What is it? What is the use case of it? What are some interesting funds to look at? So let's cover all of that in today's episode. Now, multicap, as the name suggests, it can invest across different market caps. Now, if you look at a large cap fund, they can only invest in the top 100 companies of India. A small cap fund can only invest in small cap companies. Now, a flexi cap fund can invest across the market caps, right? They can invest in large cap, they can invest in mid cap, they can invest in small cap. Now, even multi cap has the same advantage where they can invest in large, mid, and small. But there is one rule change for multi cap versus flexi cap. Now, in a multi cap fund, there is a rule by SEBI that says each market cap needs to have minimum 25% investments. For example, a large cap, let's say a multi cap fund is there, and in that multi cap fund, 25% minimum has to be large cap, 25% minimum has to be small cap, 25% minimum has to be mid cap. That means 75% you have to have at least 25, 25, 25 each. Then you can have 50% large cap, 25, 25. You can have maybe 40% large cap, then maybe 30 this, and then maybe 25 that. So that can be played around a little bit here and there. But the rule says that 25% has to be fixed minimum for these three. Then you can add on your investments depending on what the fund manager thinks and what it can be good, right? So this is basically number one rule. Number two rule that says that minimum 75% of your portfolio should always be invested in equities, right? It cannot be invested somewhere else. So 75% of it has to always be in equities. And that's why the rule is also there that 25% each market cap has to be there. So by default, 25, 25, 25 has to be there across this, right? Now, this is a very good news only because sometimes what happens in flexi cap funds, there are some fund managers that go heavy mid cap and small cap and do not allocate much to large cap. Sometimes fund managers will go heavy small cap, even though they're a flexi cap fund. They will have maybe 10% allocation to large cap, 15% in mid cap, and 60-70% in small cap. So that increases the risk of the portfolio if you are invested in such companies. So hence, multi-cap basically has this rule that it gives you the benefited of diversification, that you can get diversification very well, and it forces the manager to have 25, 25, 25 minimum. Then the manager can choose the remaining amount, which is the remaining 25%, how he wants to allocate it according to different market caps. So that is where it is. And this basically gives you a very good growth mechanism because it is large, mid, and small. Equal diversification minimum is required, right? So that way you're not heavily downsided on one side or upsided on one side. That gives you a very smooth ratio curve on that front, right? Now, there is also another question that Shashank, can they go more than 25? How much can they go up to? So whenever the economy is expanding, right, the fund manager can go for a higher exposure, maybe in mid and small. And when the economy is contracting, he can go for a higher allocation in large cap as well. Again, he still has to maintain the 25, 25, 25 rule. Only then it is very good, right? But what are the advantages of a multi-cap fund? The straight up advantage is diversification, which I spoke to you about, that you have to be invested in all three market caps as compared to a flexi cap, where there is no rule that you have to be and how much you have to be. Second, you get exposure to very good sectors because you get a mix of entire India. You get large, mid, and small. So all of that comes into that category, right? Now, let me show you one quick example of a multi-cap fund versus other category funds. Okay, so see this chart. So you will see here that I'm comparing a Nippon India multi-cap. Okay, I'm comparing ICICI Prudential large cap, HDFC mid cap, and Nippon India small cap. Now, obviously, Nippon India small cap is one of the best funds there in the small cap category, but I'm just showing you the difference between all of them. So here you will see that the Nippon India multi cap, which is 16.04%, is a 10-year CAGR, has actually beat the large cap fund, right, over a period of time. And the Sharpe ratio is also better and with a lower beta. That means the volatility of multi-cap is slightly lower, but you can get a slightly better Sharpe ratio only because I have that advantage of investing across. Whereas a large cap fund does not have this advantage of investing across different market caps. Hence, they have to be only invested in the top 100 companies of India, right? So that is basically very interesting. Now, if you look at Nippon India, they look better because it is slightly higher from a long-term standpoint while taking lower risk. So even after taking lower risk, it has given slightly higher returns on that, right? Now, coming to some other interesting funds, let's quickly go back here. let's go to moneycontrol.com. Let's put direct plans and let's see how the year-to-date performance has come in. So here you will see 2 to 3 interesting companies in multi-cap, and you can see that a lot of different companies have started coming into this space, right? Number one, we see Mirai Asset Multi-Cap Fund, which has got around 10.37% returns year to date, which is quite impressive because from last November to now, the market has not been very great. In fact, from November, we actually fell a lot. So that has given 10.37% return, which is impressive. Groww Multicap Fund, which has recently come out, they have come at 9.99, and White Oak Capital Multicap Fund has come at 9.25. And then the remaining guys are much lower than this. But the top three look very interesting, right? Now, if you want, let's go deep into it one by one. Let's look at all the top three guys right now. If we look at the Mirai Asset Multicap Fund, give me a second. Now, let's quickly go and look at all of these three companies one by one. So first, we look at the Mirai Asset Multicap Fund direct plan. As you can see, in the last 2 years, given around 20% growth. The NAV has come to 15 in the last 2 years. And the equity multicap portion is basically here, where the equity multicap has given 0.85% return. And this basket has given, though, this AMC or this mutual fund has given around 10.16. Now, please note, past returns does not mean that future returns will be the same. This is only for us to learn and understand how everything works in the multi-cap space, because a lot of people have been asking me questions on this, right? Now, we see that most of the holdings of this company is in the financial space, which is 26%, right, compared to the category average of 25. And in India, most of the companies are in the financial space. If you look at Nifty predominantly holds a lot of financial companies, right? Consumer discretionary 14, industrial 13, technology 11, healthcare 11, materials 8, and then it goes slowly down there. The largest holdings they have currently right now is HDFC Bank with 5.6% holdings, Axis Bank, ICICI Bank, ITC Delivery, and then they will go play a little more aggressive on the bottom side, right? So this is again a very interesting portfolio. Looking at the risk, they have a slightly VR, right? So yeah, so no, this one they don't have the risk profile over here on this. Going to the return profile is here, and we can check this as well. So best and worst periods, the best periods was 8.33% between June, which was during the upside of the market, and during the fall, which was between Feb, it was 6 -6.27 weekly wise. Monthly wise, December to Jan, that fall was -9%, but the best was again in June at 14%. So overall, it has been very, very interesting from that perspective, from a multi-cap fund perspective, right? The second one we look at now is the Groww Multicap Fund. Let's see the data for this company right now. So the Groww Multicap Fund, as we saw, had given around 9.99% return compared to equity multicap of -2.9. This is a fairly new fund, right? This is it does not have a very big history. It has grown the NAV from 10 to 10.93 right now. 6-month return is 10.79, which is very impressive. Okay, coming down. Let's go to the portfolio breakup of this company. So they have 32% in financials as compared to the 25% we saw with the previous fund, 26% in industrials, and the rest in consumer discretionary. So a lot of investments have gone into that. Here they have HDFC, Larsen Toubro, ICICI as their biggest holdings. Almost 15% is only in these three companies. Then you have TD Power Systems, Coforge, and this. So TD is a very nice bet, I think, and a very interesting bet that they've taken on these two fronts, right? So again, this is very interesting to look at. Again, from a learning perspective, this is what we want to do and want to learn. So this is how we try to understand, right? Okay, now coming to the minimum investment and expense ratio, the minimum investment here from a SIP standpoint and from a normal standpoint is 500 rupees over here. This is run by Groww Mutual Fund. Launch date was 16 December 2024. Open-ended fund. The expense ratio of this fund is 0.45, so it is quite low on that scale, right? And the return since launch is 9.37. The risk is high, so you need to go and look at all the fund information before taking any call on what you need to do over here, right? Now, if we see the experience of the fund manager, we see that Mr. Tiwari is a chartered accountant, right? And apart from that, he is now currently the head of equity at Groww Mutual Fund. But before that, he was a fund manager at Axis Mutual Fund for approximately 6 years. Before that, he was in a principal at PNB Mutual Fund and then in Reliance Life Insurance. He was also a senior analyst at Reliance Capital Asset Management. So he has a lot of experience in the past with being in the mutual fund industry. Okay, the third one was the White Oak Multicap. So this, if you look at the returns of this, it has been 10.11 and equity multicap has been 0.71. So again, very interesting from that perspective. Most of them have given, I mean, these are the top three, right? So the top three have given very good returns in the last 1 year. Coming down, if you look at the expense ratio, again, minimum is 500, SIP is 100. Assets are 2,600 crores. Expense ratio slightly on the higher end, 0.51 compared to the Groww one. Return since launch is 25% right now. Let me go look at their portfolio. Right, portfolios again financial heavy, 30% into financials, 15% into technology, 13% consumer discretionary, industrials, and healthcare. So most of it is in financial and technology as compared to the other ones. Their largest holding is HDFC, ICICI. Very funny, right? You see, most of them are holding HDFC and ICICI itself in their baskets right now. So that is something very interesting to look at, right? Bharti, Hexacom, Eternal, Persistent. So this is basically what they have. There is one more very interesting multi-cap that I basically looked at also. Let me show you that. I think it was called Sundaram Multicap. Let me just check that once. Sundaram Multicap. So this has a 2-star rating on value research. Okay, but let me just show you this fund because this fund has been there from quite some time, right? So if you look at the Sundaram Multicap fund over a period of time, they have got very good outperformance here, right? The NAV growth is 440 right now. The 3-year performance is this much. The 10-year performance is 15.78, only because it has some leverage, right, of being there for a very long period of time. 97% allocated. The fund size is 2,900 crores. The expense ratio is 0.93, quite high. And they've been giving good returns over a long period of time. But see, the expense ratio is so high, right? So if we looked at the expense ratio, this was 0.93, White Oak was 0.5, Groww was 0.45. We forgot to check the first one, right? Yeah, so I just want to go check the first one, which was the Mirai Asset Multicap. I forgot to see the expense ratio. The expense ratio is 0.39 over here. But the minimum investment is 5,000 rupees instead of 500. So a lot of good risk reward ratios here. But overall, multi-cap as a structure is very, very interesting, mainly from this standpoint that it also gives you that diversification of going across different market caps, right? Because I know for a fact, a lot of people have large, mid, small, flexicap, index funds, dividend funds, multi-cap funds, etc., etc. So at least now you have a clear understanding of what is a multi-cap fund, what is a flexi-cap fund, what are different type of large cap, mid cap, small caps. I would say don't over diversify in a lot of different funds as well, because I know people who have large, mid, small, flexi-cap, multi-cap, basically you almost have the entire universe. So then you're not optimizing the game pretty well, right? So that is basically how I would play this. But again, this video, by the way, is only for learning purpose. So please look at it from a learning purpose itself. We're just trying to understand what multi-cap is, how it actually works, and how the return profile has compared. It usually has a better alpha, mainly because it has mid and small into it. So it can give you a better alpha than the large cap. But it's not a pure play mid and small. Hence, the downside ratio is captured so that it doesn't fall so much when the market actually goes into a bad mode. So I hope you guys like this episode. Hope you guys enjoyed it. And if you have any doubts, any questions, you can put in the comment section below. And I will see you guys soon. Okay? Take care. See you guys. Bye-bye.